Hello and welcome to Lone Investor. So it has been quite a while since my last video update, and part of the reason why I did not do a frequent update is that I don't want to repeat the same thing over and over again. So since mid-April, I've been giving out some of the data for a possible market bottom and the signals to look for, such as the market breadth, the bond yield, and the inflation data. So since mid-April, I was giving out the earliest bull run date. We will possibly start sometime in June, which in mid-June we did saw a market bottom and we had a nice one since then. But then back in April, I was expecting the market to go sideways and to go up from June. I didn't expect it to go down this much, but nevertheless, it is impossible to time the bottom of the market. So that's why sometimes it's more important to focus on the longer terms or the broader market trend. And since throughout the whole time for the market drop, it is being caused by inflation, it is caused by the rate hike. So my idea of a June bull run was based on the flip of the inflation. So the inflation will start to cool down and the Fed might pivot from a hawkish to a dovish tone. So that will signal a ease of a market, so people will buy in. So that is what is creating the bull run that I was hoping for. So in the longer term, let's say 6 to 12 months, I still see there's a upside on the market. So possibly in Q2 of 2023, we might see the top of the market. And you know how sometimes I like to use the retracement level to predict the new market top. So if we do see a new market high, it will possibly be somewhere between 5,200 to maybe 5,500 level. So if I have to make a bold prediction for a Q2 new high, it will be somewhere between this number. So now that you know how I see in long-term view, so let's take a look at something more short time. Now it is much harder to predict something in a shorter time frame, but I do see something worth mentioning right now, so that's why I'm doing a kind of a short-term video based on what the VIX is telling us currently. So as you know, every time when you have a spike in VIX, it usually corresponds to some sort of a local bottom. So for example here, you can see a local bottom, local bottom, local bottom. And when it VIX touches some sort of support, it's usually coincide with some kind of a market top. So there's a local market top before a drop. And in here you see there's a market top before a drop, and etc. So if we respect the VIX was that support, and we once again we had some sort of a market top, and right now the market is falling and VIX is raising. And based on a technical picture, currently the VIX is forming what is called the island top. And the island top is usually a reverse signal, so it will tend to go back down. And as I've mentioned a lot of times, just technical analysis is not enough. It also needs to depend what the macro is doing to make the technical work. So one of the catalysts that is possible driving the VIX lower is the CPI data that is releasing next week. So in the short term, we might see the VIX coming back down and possibly touching the support. That will depend on how much lower the CPI is dropping for this month. And the other line is the FOMC meeting on September 21st. You know, on August 26th, the Jackson Hole meeting, the Fed starting to sound hawkish again. So that is what's pushing the VIX up for the past 2 weeks. So this meeting also brings some sort of an uncertainty. And if the Fed decided to sound more hawkish and more rate hikes coming up, we might see the VIX possibly coming back to the resistance level. And depending on how hawkish they sound, we might see the VIX possibly hitting back to the first resistance, which is about 30, and possible breaking this and hit the previous short-term support line here, so which is at about 36%. So if the VIX does hit this two level in the coming weeks, it is a good opportunity to buy again. And in terms of inflation, one of the main driven factors is the oil. And if you take a look at the July versus the August data, you can see the August average line is much lower than the June ones. So from the energy side, we will see a downside. As for the commodities, it raised slightly a little bit for in the previous month, but this rise of commodity prices might not be enough to overrun the drop from the oil. And if we take a look at wheat and soybeans, they are, I would say they're roughly about the same for the past 2 months. And on May, you know, the news of Target, Walmart, and Home Depot, they have over inventories. And I was saying the only way they can get rid of their inventories is by having a sale. And if you have been to your local Target or Walmart lately, I do see quite a lot of rollback and clearance. So they are trying to get rid of the inventories. And by doing sales, they will also ease off the inflation. And with the consumer goods still going on sale, I do expect the CPI data to be lower than last month, just not sure how much lower. So in conclusion, I still see a lot of upside to the market in the coming months, and in a shorter time frame, this is what I'm expecting. So this is it for today. If you liked the video, give me a thumbs up and subscribe to my channel, and I'll see you guys next time.